Good morning, this Thursday, the 31st of October, and happy Halloween. I'm Grady Wolf, market analyst with Bell Direct. Wall Street slipped on Wednesday as investors digested the first release of mega-cap earnings for Q3. The Nasdaq fell 0.56%, a session after the tech-heavy index posted a fresh record high, while the S&P500 and Dow Jones lost 0.33% and 0.22% respectively. Alphabet, Google's parent company, kicked off the mega-cap earnings results with a beat of analyst expectations, driven by strong demand for the company's cloud business. Meta and Microsoft will post results after the closing bell US time. Key US GDP data for Q3 was also released overnight, indicating the US economy grew by a slower pace than expected for the quarter. In Q3, the US economy grew 2.8% on an annual basis, while economists were expecting growth of 3.1%. Key payrolls data also out on Wednesday in the US, though, pointed to strength in the labour market, with private job creation jumping to the highest level in a year. Over in Europe on Wednesday, markets in the region closed lower following the release of key corporate earnings results and Eurozone flash GDP data, indicating that the Eurozone grew by 0.4% in Q3, which topped economists' expectations of 0.2% expansion. The Stoxx 600 fell 1.2%, Germany's DAX fell 1.13%, the French CAC dropped 1.1%, and in the UK, the FTSE 100 ended the day down 0.73%. Across the Asia region on Wednesday, markets mostly fell, led by Hong Kong's Hang Seng sliding 1.65%, while China's CSI index lost 0.9% and Japan's Nikkei ended the day down 0.96%. Locally on Wednesday, the ASX 200 fell 0.83% despite inflation tumbling to an annual headline rate of 2.8% for the 3 months to September, and that's down from the 3.8% reported in June, or the June quarter. While this reading is positive for rate outlook, the RBA is still unlikely to reduce the nation's cash rate until at least 2025, as a drop in inflation is expected to be short-lived, with key drivers remaining sticky. Core inflation, which is the RBA's preferred inflation reading, rose 0.8% in the September quarter, which topped forecasts of 0.7%. A key driver in the drop of inflation over the period was a decline in petrol prices due to the 18% fall in the benchmark price of oil over the past year, amid weakened demand outlook from China. Rental prices have failed to ease up though, which is another key driver of inflation remaining sticky, with a rise of 6.7% in the 12 months to September. A tough warning from our supermarket giants saw Coles and Woolies shares decline 2.4% and 6.1% respectively yesterday. Woolworths warned it would post a lower profit in the first half after it was forced to implement more promotions to entice shoppers back into stores, which has been the theme felt by most retailers in FY25 so far. Ahead of Thursday's trading session in Australia, the SPI futures are anticipating the ASX to open the day down 0.17%, tracking Wall Street's sell-off overnight. On the commodities front this morning, oil is trading 2.77% higher at $69.07 a barrel. Gold is up 0.44% at $2,787 an ounce, and iron ore is down just 0.06% at $104.09 a tonne. The Aussie dollar is buying 65.75 US cents, 100.79 Japanese yen, 50.69 British pence, and 1 New Zealand dollar and 10 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained a buy rating on Gold Road Resources and have raised a 12-month price target on the gold producer from $2.10 to $2.40 following the release of the company's Q3 FY24 results, which were weaker than expected but positions the company well for Q4, especially given the return to peak high-grade gold ore throughput into the strong gold price environment. And Trading Central has identified a bearish signal on Commonwealth Bank of Australia following the formation of a pattern over a period of 36 days, which is roughly the same amount of time the share price may fall from the close of $1.42.93 per share to the range of 129 to 132, according to standard principles of technical analysis. And that's all for this Thursday. Have a wonderful day. Happy Halloween and happy investing.